What is going on, everyone? How are we doing today? It is June 4th, 2026, and in this video, I'm going to be recapping the best trades of the day, right? We had two beautiful setups today. Honestly, today is one of the best days in trading of 2026. We had so many great setups before 10:30. It was a beautiful, beautiful day. So many people smacked TP. It was just a great day for us traders. So without further ado, let's get right into it. So coming into the morning, what do I always do? I try to establish my daily bias, right? Either on the 4 hour, 1 hour. And coming into the day, what do I see? I see that we finish this little internal sell model, right? We finish this, we finally retrace back into that main hourly fair value gap. But this is all completed. We had this trend line liquidity right here. And as you can see, we just completely swept all of that, finishing this whole entire model. Now, what comes next? We need to find a way how to rebalance this range. And we do that from internal to external liquidity or external to internal liquidity, right? So in this range, what unmitigated gaps do we want to target? Right above us, we have this hourly gap right here, unmitigated hourly. After tapping into a higher time frame bullish PD array, we have the 1 hour as well as that 4 hour intermediate low. And this is very important, right? Finding out our draw, finding out where the market wants to move. We have unmitigated gaps above us, and we just need to rebalance this range. So now we're on the lower time frame on the 15-minute, and what am I going to be looking for? I'm going to be seeing what price is doing, right? We are delivering from sell side. We are respecting these bullish gaps in the market, and we are disrespecting these bearish gaps. As you can see, candles closing above, currently respecting bullish order flow. So that is exactly where we're going to target. So what do I want to see at market open? I want to see us open lower and close high, right? Super simple concept. We want to be trading in discount. I want to see us lower into a higher time frame key level, such as this hourly fair value gap, and then take longs up to this unfilled, unmitigated hourly gap. So now that we have the basic idea and the understanding of what I want in the market to happen, we just essentially wait for this to play out or be reactive. If we do not get the scenario where we open lower and close high and start taking longs, then we have to be reactive, wait for more structure to form, see what the market wants to do. However, it's always important to come in with the plan, see how the market is reacting. We're respecting these bullish gaps, we're disrespecting bearish gaps. We can clearly see we have areas above us that need to be rebalanced, and we have bullish PD arrays under us that we are currently respecting, so I am going to be bullish right now. There's no reason for me to be bearish on the lower time frame and even the higher time frame as of now. All right, so coming into open, I'm going to go ahead and fast forward this, but boom, boom, I believe, yeah, right here, 9:30, open, beautiful Judas swing lower, taking out all of this sell side liquidity, right? We are delivering from sell side in a higher time frame bullish PD array. On NASDAQ, we create this SMT, and if I go over to ES right here, you can see ES did not take that out, and the NASDAQ did. So bullish SMT in place, 9:30 Judas swing, SMT formation in bullish PD array. What am I going to be looking for? I'm going to be looking for the highest time frame inversion. And in this situation, there's actually no 1 minute, there's no 2 minute, there's no 3 minute. It was actually a 30-second inversion. Now, I know a bunch of you watching do not have the TradingView premium plan. I believe it's like 400 yearly or something like that. I can be wrong, to be honest. I'm not too sure. You can go ahead and check on their website. But the 30-second time frame is incredibly valuable, especially in situations like this with the Judas swing. Now, a lot of people tend to wait for the higher time frame inversion. As you can see, I believe there even was a 2 minute, yeah, all the way up here. But if you are trying to take this 2 minute off of this, you're not going to get any RR. You're not going to be able to capitalize on any trade. If you waited for this to close above here, your whole take profit it's done essentially. You have no actual value to be gained from this. So the 30-second is incredibly valuable when you don't have another time frame. We had a beautiful 30-second change in state of delivery right here, as well as an IFEG, and this is exactly the perfect spot for entry. I already have it marked out, and as you can see, the trade absolutely flies through. Now you can have either targeted all these equal highs, which is a phenomenal target. If you have seen any of my other videos, I always talk about equal highs. They're so strong, such a great magnet for price. Or the original target, which was that unfilled hourly gap, right? What did we say in the video? The market needs to rebalance itself. We go from external to internal liquidity, and that is exactly what happened. This was a beautiful, beautiful trade. I know a ton of people who took it. And yeah, that was a 9:30 Judas swing. And the reason why I'm saying you can't wait for the highest time frame inversion is because the Judas swing model, I guess as you would call it, that is built off of two things: momentum and discretion towards your draw on liquidity. If you are confident you have a strong draw and you know where the market wants to go, there's a ton of liquidity that needs to be swept, then that is okay and valid to take a 30-second, especially with confirmation from the CISD. However, you cannot be waiting for a higher time frame inverse like the 2-minute, because 9 out of 10 times the momentum will just completely wipe you out of the water and you will just not get an entry. So that is the only like special occasion and rule for the Judas swing, just because it relies so much on displacement from candles, your draw on liquidity, and how confident you are in that draw. Because essentially, right, we did have these bullish formations, SMTs, taking all that sell side liquidity, all these different things. But if you're not confident and you did not want to enter, and instead you waited for a 2-minute or 3-minute, you really wouldn't have had an entry, right? I mean, your entry, you would have made like 10 points on that. And yeah, that's essentially the whole first trade. Super easy, right? We had all of our confirmations, all of our confluences being proved right. We had an amazing draw on liquidity, targeted that 930 Judas swing manipulation, beautiful 30-second IFEG and CISD. And yeah, that's trade number 1. All right, so moving on to the next trade, it actually was like 2 minutes right after that initial long. And now we are switching to bearish order flow. We are looking for shorts. And in this situation, what do? We tapped into a higher time frame bearish PDRA, and we have so much liquidity under us that we haven't swept. Since we ended up creating that bullish SMT, what do we have under us? We have stacked lows right here, fantastic draw, as well as, probably more important, this 930 low. Now at 930, this is when there's the most volume. This is the best time in the market, and this low and this wick right here is a phenomenal draw. Like 99% of the time, you can go ahead and back test this, that whatever wick we end up having, price always ends up retracing or retapping it. And in this case right here, we wicked lower into that bullish PD array, and we still have not taken that out yet. Tapping into the higher PD array after we took out all this liquidity, now our stop loss is protected. Why is our stop loss protected? Because we already took out these highs. There's no reason for us to go higher. We only have liquidity under us that needs to be swept. Now, what are we going to be looking for after tapping into the higher time frame inversion or higher time frame PD array? We are going to be looking for the highest time frame inversion. And that is exactly what we do. As you can see, we ended up tapping. We created a 1-minute IFEG, and we displaced beautifully with a change in state of delivery. I believe it was a 2-minute change in state of delivery right there. And what do we have? A perfect entry. Now, since this high is protected, we're not going to go high anymore. We already took out our draws, and we're not in bullish order flow anymore. This is a great stop loss. And what do we also have? We have our target, our 930 below us, which is a fantastic target. And you could have even hold on. And honestly, it would be not insane. And honestly, you could have either, now in this case, you could have either targeted the 930 wick, or if you wanted to play a little bit more greedy, you can target this. Now, I wouldn't necessarily say it's greedy since you're taking a bigger trade. However, there is just more risk for error because you never know. Sometimes we might get a continuation. Sometimes we might get a fat pullback into the gap again. And that's why I stress this importance so much. But in my case, I love the 930 wick, and I was more than happy with a but in my case, I was more than happy with just targeting the 930 wick. It's already a 1.5 hour trade. You could have held down here to bring it to almost like what, 2.5, 2 something, just depending on your entry. However, I just took the 930, and what ends up happening, beautiful, beautiful displacement, instantly smacks. We just displace all the way through. Now, this is a fantastic trade. If you did hold on to this, it would have played out. However, if you did not get this original entry, what ends up happening is that we end up getting a pretty big pullback first before we end up taking out all this liquidity. And what did we create? We created another entry opportunity. What do I mean by that? Right? We did create a 5-minute fair value gap. We then retraced into our bearish 5-minute fair value gap from this leg, a simple continuation short. This is a prime example of a continuation short, right? We were going from our internal to our external liquidity, which is the opposite of our first trade, which was our external to internal. So now we're going internal to external. However, since we did not finish this yet, what did we have? In this leg, a 5-minute gap was formed. We retrace into that with a minute IFVG. Now, if I go ahead and go into the minute, sorry, what the hell just happened to my charts? Right here, we had a minute IFVG form, and what the hell? Minute IFVG right here. Beautiful displacement. And this is just another entry opportunity. Fuck. If you did not catch this first initial short, do not worry, because in this situation, we ended up just taking out that 930 low, that 930 wick that I was talking about, but we still had all this liquidity back here for us to take. Now, we didn't flush immediately. However, what did we have? We had a pullback. We created a 5-minute bearish fair value gap in this manipulation leg. And sometimes we just get a retracement. So we had the 5-minute, we ended up retracing back. And what are we looking for? We're looking for an inversion off of that leg. Now, right here, what did we end up forming? We had a 1-minute IFVG with beautiful displacement through it. Just took that 1-minute IFVG. You would have seen that it would have just held, and we immediately took out that liquidity. And yeah, that's essentially the whole trade day, the whole trade morning. For example, we were lower. We ended up tapping into our bullish PD arrays, creating bullish SMTs, bullish order flow. We want to see price rebalance the range by going from external liquidity to internal liquidity. Took out the hourly unmitigated gap. Now we are trading in a bearish PD array on a higher time frame. Price starts going down. Now we had a beautiful short opportunity because we had liquidity down here that we did not take. Beautiful, beautiful entry. Price action was just absolutely phenomenal. It's nice finally seeing a great day. Honestly, all of June, the last 4 days have been incredible for the markets and for us traders. But yeah, that should wrap up the video. If you have any other questions, anything you want me to make a video on, let me know. If you guys like, share, comment, whatever it is, anything is super appreciative. And I'll see you guys in the next one. Peace.